Hey, good afternoon, everybody. It's Mike. It is Friday, 21st of April. This is our weekly recap. It goes out to everybody in my membership and also on my social media accounts. If you want to join us, link in the description, smartoptiontrading.com. Come over, click on live trading alerts, and join us for $25 for your first 30 days. Market highs here. So let's talk about this week. It's been a very nasty, difficult week here in the market. It's a very nasty, difficult couple of weeks as this market has stalled out. In general, we're holding and riding the 8-day. We've been below it the last two sessions, but have closed either on it or now we're right back above it with 2 hours to go. It's a little early. I just have very little interest in trading this market at this point today. And, we're trying to push back up. Why is this market doing this? The market doesn't want to release. It doesn't want to go down, doesn't want to go up. It could be waiting for more of the big tech earnings to come in. It could be waiting for the Fed in about 10 days or 10 trading sessions. Who knows? I tend to think it's more the big earnings than the Fed, but we'll see. Bottom line is we're stuck and the market doesn't want to break up or break down at this point. But overall, things remain bullish as long as we continue to hold the 8-day. The oscillators have cooled off to dead neutral, and we really have not a lot going on here. So what was strong this week? What was good? It was a day-by-day basis where different names came in. The banks had a lot of strength early on this week. They pulled back a bit. JP Morgan off that report, nice 3-day push last week and into this week and has come back a little bit. Goldman Sachs trying to break out here. Morgan Stanley, they came back with that one, a nice move there. The banks in general remain strong. The regional banks have not been the place to be. And they AALLY have not been the place to be. They remain a weak spot. Energy this week, pretty much out of play to weak. And then there's earnings. Let's talk about them. Tesla, take that report. It wasn't a good report. It wasn't a horrific report. They were roughly in line on EPS and earnings, depending upon who you talk to, either a small beat or a small miss. Their margins were a problem. Margins were down to 11 cents, which is why their free cash flow instead of 3.4 billion was around 400 million. And, they admitted on the call that half of that was because of the price cuts they've done. The other half were one-time write-offs. But they also admitted that it didn't take into account the price cuts they've been making in the current quarter. So probably a little bit more pain for Tesla in terms of margin coming ahead in the next quarter. But, they probably something they can deal with. They're trying to get market share. And if you're listening to Musk, he's betting the farm on automation and selling his autonomous driving software. He said by the end of this year, I have my doubts that would be approved by the NTSB by the end of the year. Bottom line is, if you look at Tesla, you're trading on an islandish of sorts. You have a gap above and a gap below. We'll see which one it wants to fill first. Netflix earnings, they were okay. They weren't great. Their subs were a miss. They guided in line for the rest of the year, and it's down a little bit, but going nowhere. But truly, not too much going on here. You take that aside, FCX this morning wasn't very good. It's down. It was actually sounded better than it was, but they didn't like it. Alcoa, they brought it back, and now they've sold it off. Same thing with STLD. J&J, they dumped on earnings and it brought it back. Abbott actually had good earnings and is holding it nicely. Procter & Gamble had very nice earnings and holding it well here. The strength in the rest of the market has been in very specific names. Amazon today breaking out above the 200-day. We'll see if this holds. They have earnings next week. Google continues to be one of the stronger names right now in tech, holding in well. Meta had a little bit of a pullback this week, but still holding the 21-day. Microsoft also held the 21-day. You kind of get the picture here. Apple broke above the downtrend, looked like it was ready to break out, and they brought it right back in. And I think that's the problem you're seeing here in this market. It's having a very hard time trying to get out. Things move and they come back in. Taiwan Semi, they loved it yesterday on that report, and now today they gave it back and then some. Tough market. NVIDIA resting here. You got a couple weeks till earnings there. Coming back, holding the 21-day. AMD holding the 50-day. So the market overall remains a very, very tough trading environment. You get a lot of intraday chop moves that are very difficult to play. You get stopped out, then they only watch things come back. If you look at the SPY today, it's a great example of it. I mean, you look at this chart, it's like, it's like a heart attack. I mean, here, sorry. You look at this big down move, everybody thinking short, come back, put a new high of the day in. within a, V bouncing all the way back down, put a new low of the day in. I mean, this is not easy, guys. And then we came up, we chopped around, and now we put a new high of the day in here, and we'll see. So with that said, I'll probably do charts tomorrow or Sunday morning early, probably Sunday morning early. Have a great weekend, guys. Enjoy, and I'll catch you guys all in the room bright and early on Monday morning.